Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to explore some beginning narratives that are starting to flow out of the markets. One of them is that the employment situation, I believe, is going to continue to deteriorate. In Wednesday's Fed message that Powell delivered, we heard all about how the unemployment benefits were going to be taken down over the next several months, and that was going to probably stimulate people to go back to work. The reality is that may be the case, but I don't think they're going to get the traction that they think they're going to get. I've been talking about this over the last 2 months, that I think as we come into Q3 and 4, there's going to be some other elements come in. I also mentioned in last night's video, by Q3 and especially by Q4, we will have some real data to look at to realize that this transitory inflation is not transitory. This is going to be material going forward, and that will be the dialogue that I'm likely to keep up as we come in through the next several months. We're going to finish this quarter in a couple weeks, and then we'll start to move on to Q3 and beyond. And I think it's going to be very challenging. I do not believe it's going to be a smooth road as most are projecting right now. One of the other elements that I'm looking at from a technical viewpoint, we are right at a very critical tipping point that could signal a multi-week sell-off. And I'll be watching these numbers. I'll go through the details and the technicals tonight. We're very close to an event similar to last June's high, where we're going to get several weeks of a sell-off fairly quick, and then I expect to see major support hold. I'll go through all those details here in just a few minutes. But as we look back on yesterday, we had some reasonable volatility. The volatility was about a 30 handles on the S&P, which I tend to focus on, and we saw some pretty decent sell-offs followed by a rebound, and we ended up just flat on the session. The S&P was down minus 0.04. NASDAQ was up 0.9. It had a volatile day as well. It was up over 200, faded, came back and closed pretty firm, up 0.9 on the session, and the Russell is just lagging. It appears that nobody wants to own these small cap stocks right now. Everything's getting sold down pretty heavily, as we were down 1.2% on the Russell. Other news yesterday, also got the claims numbers yesterday. They came in at 412. Everybody was looking at 360. This is part of what I'm talking about. We're going to see this continue to inch back, I think, from here. Continuing claims, non-event, 3.5 million. It's been basically locked in 3.4 to 3.7 for the past 8-10 weeks. The final thing that I'll mention before we get into the technicals tonight about our database, we saw over 3,000 sell signals for tomorrow morning's open. But this is material and is telling us that the internals of the market is starting to break down. This is why there's so many critical levels that need to be watched over the next several weeks. So let's go ahead and take a look at the charts, see how the end of this week is set up. As I review the WaveTech database, we are looking at the weekly models right now. We're currently 75.16% long. Today is Friday, so we'll be running the weekly models, and my expectation is we're going to see a fair amount of selling. We are likely to decline under 70%, possibly under 68%. This will still keep the intermediate trends in a positive mode, but my expectations are we will see a continued deterioration over the next several weeks. Going to the daily database, we did have 3,044 sell signals, 216 buy signals. The percent bullish on a short-term database has dropped to 42.55%. This is a number I talked about last night that will be critical. If we drop below this on Friday night's run, coming into Monday, if we go below 42%, that will signal a full liquidation of the database, suggesting it will drop to around 27 to 18% bullish, which usually is associated with anywhere from a 3 to 7% decline in the overall markets. And what will really be told is how much selling we see in the intermediate over the next several weeks, whether or not we're forming a larger material top in the markets at this time. As I begin with the S&P futures, we are up 3.25 overnight. 42.15 is the number. Looking back on yesterday's analysis, I thought we would get an R1, S2, possibly an S3, and that's exactly what we got. We had a high of 42.22, R1 42.2150, and S3 41.86, low 41.83. We bounced back and closed at 42.12. So most of the declines were recovered. As we look at tonight's activity, very narrow range so far, 8-handle range, 42.12 to 42.20. R1 is 42.22. It's very possible we're going to see an R1 S2 again, possibility of going down to an S3, 41.81. The PPMs are all rolling over here. This is a substantial event. Along with the liquidation we're seeing in our short-term database, this is suggesting we're likely to close under 42.03 on the futures. I'll cover the cash because there's more critical numbers on the cash. Let's go ahead and take a look at the SPX. In yesterday's activity, we did see a decline down to 41.96. STX was 41.93, so we fell just short of an STX. R1 was 42.30.77. The actual high was 42.32.29. So we got an R1 STX basically on the range for yesterday. We're also seeing the volatility expand a little bit, which is somewhat helpful from the standpoint of the market trends. The PPMs actually stabilized a bit, but these are going to turn down tomorrow, just like what's going on with the futures right now. And so as we look at the market grid for today, my expectation is for a 42.30 R1 S2, 42.04, and I'm going to show you a number on the weekly chart that is very critical. If we take out 42.04, then we're going to print down, probably retesting the extremes of yesterday, possibility of going to an STX. What this is setting up is very interesting on the weekly charts. As I go to the weekly chart on the SPX, you'll see that the market grid has narrowed substantially. I talked about this on last Monday night's video, that this contraction is actually dangerous, suggesting if we close under the 42.01 level, which is the 10-period moving average, PPM is actually starting to turn down. There's right now only a 30% probability that this level will hold. So there's a 70% probability that we're going to penetrate through 42.01 and head down to that 40.51 level. That number is rising per week, about 20 handles per week, so that'll be 40.70, and then if it takes 2 weeks to decline, that'll be back to around 4100. I will update that as the numbers unfold and if we get this trigger. Right now we do not have the trigger on the sell, but I believe we will get it. And this is because of the liquidation I'm seeing in the database is telling me that we're going to see further weakness in the markets. This is not the setup. This is not the setup from a viewpoint of the database where we're going to see the markets just flip around and go higher in this range. We're definitely going to see it back toward the 4100, maybe 4050 level. There may be much more into this. There may be a test of the 40-period moving average at 38. I don't want to get ahead of myself, but there's definitely some weakness starting to show up, and we're going to have more information as we come into the end of June and into that Q3 that I talked about in the opening comments. This is where we're going to figure out what the next cycle is going to look like. Next market that I'll cover is the NASDAQ. NASDAQ is a very interesting pattern. It Looked like we were going to challenge the 10-period moving average, which we did. We traded below it yesterday and then reversed and went all the way up to the STX numbers. We just look at the numbers on the NASDAQ futures yesterday. S3 was 13,822. The low was 13,841, so it came very close to that number. The high, 14,199. 14,122 was the R3, so we printed up to that level. And what we're seeing from the market grid on the NASDAQ is it's expanding in its volatility, and the PPM1 is, this tells me that we're probably not going to see any major declines on the markets today. The NASDAQ has still got a decent bid overnight. Right now it's up 37 handles, up 0.26 on the evening. We're still seeing the other markets, the S&P and the Russell futures, actually lag here, but the NASDAQ is definitely the leader again as we're seeing the tech stocks come back into play. It appears that we aren't likely to continue this rally into new highs as we're seeing the PPMs all roll over overnight. I'll go through a lot of detail on Sunday night's video once I've seen the close on Friday. The final market that I'll cover tonight is gold. Gold just plummeted yesterday. 2 days ago, I thought we would hold the 1840 level. That had no relevance at all. We actually did reverse and close back above that level, but on yesterday's action, we gapped lower. Everything was about the stronger dollar. The dollar is traded almost to the 92 handle, and it's likely to continue higher, and that's going to dominate the action in the gold. We did get an STX buy signal. If we look at yesterday's range, we closed well below the extreme for the session yesterday. 1823.50 was STX. We closed at 1774.80, and now we're seeing some moderate strength. Typically what will happen after an STX, we'll get an R1, R2 rally back. We've seen 87 so far overnight, 1787 at R1, 1785. I think we'll probably head back toward R2 1797, a possibility over the next couple days, trading back toward 1810. It looks to me that gold is going to want to get back above that level. There's been a lot of deterioration in this. As I mentioned last night, we did get a sell signal on gold up at 1879 on 614. That was a liquidation of a trade that has been on going back to 319. It is neutral on a short-term basis. The weekly charts still have a position. I would be, if you're a WaveTech user, make sure you watch GLD for the signal on Friday to see if we get a liquidation on gold. We definitely printed to an extreme. There's some numbers on the monthly charts. I'll go into more detail on Sunday night's video, but 1776 is actually major support on the monthly chart, and I'll show you that on Sunday night. This will complete the video for tonight. Thanks again for coming to the live stream and participating in the channel. And don't forget to hit that like button and subscribe. We're almost right at 30,000 subscribers. So I need 700 more to get us over the hump, and we'll have a party next Wednesday. So make sure you subscribe and hit that notification bell. Thanks for watching. Have a great weekend. We'll talk to you on Sunday night.